Talk us through the details.
Well, the first thing to note is that this morning, which is the first time the stock's had a chance to react to this news, is it's down about 2.5%. So what we learned last night is that essentially Mitsubishi UFJ Financial will kind of take about a $300 million hit that's related to what's been going on in the unwinding of these massive positions from Bill Hwang's family office. And so in a sense, you're seeing investors kind of say, well, listen, this is an impact, but it's not anything on to the degree of what we've seen in share price reactions in say, Credit Suisse, where we know there is some fairly serious problems, and also at Nomura as well in Japan. So it's a relatively small move this morning. But essentially what's been happening over the last few days in Japan, as we kind of piece together how this fund liquidation has kind of played out across markets, is there are a number of Japanese firms that we already know that are involved in this. And you know, there's nothing to rule out the possibility that others may still be at some point linked to this. So it's still early days, and there's a lot of work still going on to piece this. But certainly for now, Nomura and MUFG's securities unit both involved in the situation quite significantly.
So before this week, Nomura's CEO was about to end his first year in charge, with the firm looking like it was in pretty good shape, right? Does this really meaningfully change that now?
Yeah, I mean, that's the case, really. When Kentaro Okuda came into the job on the 1st of April last year, of course, the pandemic was just kicking off. And in many ways, it was a very difficult time to come in charge of any firm, let alone a financial firm with a big securities business and a business that looked like it was going to have a pretty tough time with the pandemic. Of course, we now know that a lot of banks around the world, not just Nomura in Japan, but a lot of banks have benefited from the increase in the volatility that you saw in global markets. They did well off the back of that. And Nomura told us essentially that the profit had been very, very strong when they reported their 9-month numbers, which took us through the end of December. They gave us those numbers recently. So all in all, it was looking pretty good before the start of this week. And the $2 billion that they have said that they may need to end up taking a hit on is essentially reshaping that kind of narrative that Okuda had been able to demonstrate of how well he was running the business over the last 12 months. Of course, it's just one area. There are many areas of the business that are still doing well. But I think what this does do is just refocuses the attention on where does the responsibility lie at financial firms, not just at Nomura, but how does risk management get reassessed during this process of these big unwinds? Who ultimately does the buck stop with that have to take responsibility for these things? And of course, Okuda is running Nomura at this point, so he does bear some responsibility in this. It, of course, remains to be seen what ultimately the number will be at each bank, including Nomura. And these are just estimates at the moment of how much the hit could be. But certainly it's put a real dampener on the first 12 months for Kentaro Okuda, because it did look like a pretty good first year up until this week.